Mr. Speaker, I rise today to recognize the Monster Energy American Motocross Association professional supercross rider Aaron Plessinger on his remarkable victory and his second career win under what many are calling the worst conditions in track history this year. This wasn't just a race, it was a test of endurance, resilience, and unwavering determination. In the face of deep ruts, relentless mud, and brutal terrain, Mr. Plessinger, the cowboy, displayed not only exceptional athleticism, but also the kind of mental toughness that defines true champions. His performance serves as an inspiration, not only to inspiring athletes, but to Americans who know the success that often comes when the odds are stacked against them. Aaron, the cowboy, we salute your grit, your perseverance, and your example. Congratulations on a well-earned victory. Mr. Speaker, I yield back.
For what purpose does the gentlewoman from Florida seek recognition?
Consent to address the House for 1 minute and revise and extend my remarks.
Without objection, the gentlewoman is recognized for 1 minute.
Thank you, Mr. Speaker. The state of Florida is teeming with champions. I rise today to proudly congratulate Nova Southeastern University on winning the 2025 NCAA Division II Men's Basketball National Championship. The NSU Sharks, based in Davie in my South Florida congressional district, have made our entire state proud. With a thrilling 74-73 victory over Cal State Dominguez Hills, they capped off a dominant 36-1 season to bring home their second national title in just 3 years. What an accomplishment. Led by head coach Jim Crutchfield and tournament MVP MJ Araldi, these Sharks showed grit, determination, and the excellence that defines Florida's student athletes. Their 23-game win streak to close the season is nothing short of extraordinary. These student athletes represent the very best of South Florida: excellence, pride, and heart. Their dedication, both on the court and in the classroom, is an inspiration to us all. To President Moon, the coaching staff, the students, and alumni, congratulations, and thank you for bringing another national championship back home to the Sunshine State. Go Sharks! I yield back the balance of my time.
For what purpose does the gentleman from Pennsylvania seek recognition?
Mr. Speaker, request unanimous consent to address the House for 1 minute, revise and extend my remarks.
Without objection, the gentleman is recognized for 1 minute.
Mr. Speaker, I rise today to recognize the musical talents of Soren Morelli. Soren, a Brookville area high school junior, has once again earned the prestigious opportunity to perform with the Pittsburgh Symphony Orchestra. The student side-by-side program is highly competitive, selecting only the most dedicated and talented student musicians from across the region. Soren's invitation back for a second year is a testament of his exceptional talent on the violin and unwavering commitment to his craft. This opportunity is more than just a performance. It's a glimpse into the life of a professional musician. Over 8 weeks, Soren rehearsed and performed with the Pittsburgh Symphony Orchestra, gaining valuable experience that no doubt will shape his bright future in music education and conducting. Through his dedication to the Brookville Orchestras, the PME Festivals, PME8 Festivals, and the Venango Symphony, Soren has set an example of what passion, discipline, and perseverance can achieve. Congratulations to Soren on this proud accomplishment. We all look forward to everything your future holds. Thank you, Mr. Speaker, and I yield back the balance of my time.
For what purpose does the gentlewoman from Minnesota seek recognition?
Mr. Speaker, I rise to seek unanimous consent to address the House for 1 minute and revise and extend my remarks.
Without objection, the gentlewoman is recognized for 1 minute.
Mr. Speaker, I rise today to recognize Paige Beckers for her accomplishments in women's basketball and for leading the University of Connecticut women's basketball team to victory in the NCAA championship. Paige Beckers graduated from Hopkins High School in 2020. From an early age, she was known across Minnesota for her stellar basketball skills and her outstanding character. Paige's excellence led her to the University of Connecticut, where she was a dominant force in her NCAA Division I basketball. Over her career, she amassed many prestigious awards, including the ESPY's Best Female College Athlete and being selected as a first-team All-American 3 times. Winning the NCAA championship with UConn is a testament to her talent, resilience, and leadership on and off the court. Paige's teammates and coaches have praised her for her team-first mentality and her dedication to their sport. Paige serves as an inspiration and role model to athletes across the country, and I, along with the entire state of Minnesota, are incredibly proud of her and her accomplishments. We will cheer her on as she enters the 2025 WNBA draft, and we can't wait to see what's next for the remarkable Paige Beckers. Mr. Speaker, I yield back.
For what purpose does the gentleman from South Carolina seek recognition?
Mr. Speaker, I ask unanimous consent to address the House for 1 minute, revise and extend my remarks.
Without objection, the gentleman is recognized for 1 minute.
Thank you, Mr. Speaker. Since President Donald Trump achieved a mandate from the American people, leftist judges have imposed multiple nationwide injunctions against his administration, exceeding their realm of power. Judges should not have the authority to unilaterally issue warnings that affect the entire nation. Today, House Republicans will vote on the No Rogue Rulings Act introduced by Congressman Darrell Issa. This will put a stop to the dangerous judicial activism that is prohibiting President Trump from implementing his agenda for the American families and for national security. This act will prevent partisan judges from abusing the Constitution and will uphold the system of checks and balances as stated in their granted authority. In conclusion, God bless our troops in the global war on terrorism continues. Open borders for dictators puts all Americans at risk of more 9/11 attacks imminent, as warned by the FBI. Trump is reinstituting existing laws to protect American families with peace through strength. I yield back.
For what purpose does the gentleman from California seek recognition?
Mr. Speaker, I ask unanimous consent to address the House for 1 minute.
Without objection, the gentleman is recognized for 1 minute.
Mr. Speaker, the stock market is decimated, almost 20% down, entering bear territory. At the same time, bond yields are skyrocketing, meaning ordinary Americans are going to have higher interest rates on their credit cards and their mortgages. It means we're going to have to pay more on our debt. At the same time, the dollar is declining and prices are going up, meaning it's going to be harder to afford groceries. Mr. Speaker, this is the most self-destructive, wealth-destroying policies any administration has undertaken in modern American history. They have tariffs at 1909 levels at 22.5%, making a global trade war. Businesses have lost confidence. There is only one way out. We need a reset of this president's economic team. Howard Lutnick was talking about building more screws in America as if we were living in the 19th century needs to go. We need new economic thinkers with this president who actually understand how the economy works and can turn things
Gentleman's
around.
time has expired. For what purpose does the gentleman from Michigan seek recognition?
Mr. Speaker, I request unanimous consent to address the House for 1 minute and to revise and extend my remarks.
Without objection, the gentleman is recognized for 1 minute.
Mr. Speaker, I rise to thank the courageous men and women responding to the historic ice storm that left tens of thousands without power across northern Michigan and the Upper Peninsula. 10 counties are under a state of emergency, and our grid suffered near total collapse under nearly an inch of ice. In the face of these challenges, linemen from Michigan and across the country have worked tirelessly in brutal conditions to restore power. This past weekend, I was able to meet with many of our first responders, police, firefighters, dispatchers, and emergency medical teams. They all answered the call, keeping our communities safe and our roads open. Their bravery, professionalism, and dedication embody the spirit of resilience and unity that defines northern Michigan. To all those affected, your determination has not gone unnoticed. My colleagues and I stand ready to support the state's request for federal assistance. Please join me in thanking these everyday heroes who rose to the challenge, helping us rebuild, recover, and emerge stronger. Thank you, and I yield back.
For what purpose does the gentleman from California seek recognition?
Chairman, I ask unanimous consent to address the House for 1 minute and revise and extend my remarks.
Without objection, the gentleman is recognized for 1 minute.
Thank you, Mr. Speaker. President Gerald Ford had a vision. He signed the Individuals with Disabilities in Education Act to protect the most vulnerable amongst us, special needs kids. One of the most cruel things I've seen in my time in Congress and with this administration is the attack on the public servants who promote and have never had the resources to really protect special need kids. This president has cut public servants at the Department of Education. 1,315 workers were fired 572 accepted voluntary separation packages. 63 probationary workers were terminated. Programs for students with disabilities were moved to the Department of Health and Human Services, where 20,000 public servants were cut in January. There are approximately 7.5 million special needs kids in this country protected by IDEA and the Department of Education. They rely on the public servants that were just fired and eliminated. The number of students served by IDEA has grown by over 1 million in the last decade. The administration has gutted the Office of Civil Rights, which protects these students from disabilities with
Gentleman's time has expired.
This is outrageous.
For what purpose does the gentleman from California seek recognition? Without objection, the gentleman is recognized for 1 minute.
Mr. Speaker, I rise today to recognize and celebrate the Sierra Pacific girls basketball team for their incredible 2025 season. Last month, the Lady Bears won the CIF Central Section Division II championship. This was the highest CIF Central Division a team has won in Sierra Pacific high school history and the highest division a team has ever competed in. These athletes showed grit, heart, and determination all season long. Their championship win isn't just a testament to their talent, but also their discipline. Wins like this don't just happen. They are earned through constant practice, tough losses, and in never giving up on one another. They worked hard and trained all year for this, and I'm honored to stand here today to celebrate them. To the players, coaches, and families, congratulations. You've made us all in the Central Valley very proud. Mr. Speaker, I yield back.
For what purpose does a gentleman from North Carolina seek recognition? Without objection, the gentleman is recognized for 1 minute.
Mr. Speaker, I rise to honor the heroes of the 4th Fighter Wing at Seymour Johnson Air Force Base in Goldsboro, North Carolina. Air Combat Command Commander Ken Wilsbach awarded 31 incredible, amazing airmen from the 4th Fighter Wing high-level decorations. The ceremony recognized the airmen for their rapid response and performance in the largest air-to-air engagement in over 50 years. When faced with unprecedented threats, courage and bravery surged to the forefront. Our service members defended U.S. coalition partners, including Israel, embodying the true essence of service. These airmen, receiving well-deserved decorations, surrounded by their family and friends, have rightly earned our nation's gratitude. America, here's what heroes look like right here, and I'm so proud of each and every one of them. Thank you, Mr. Speaker. I yield back.
For what purpose does the gentleman from Florida seek recognition?
Mr. Speaker, I ask consent to address the House for 1 minute and to revise and extend my remarks.
Without objection, the gentleman is recognized for 1 minute.
Mr. Speaker, today we recognize the achievements of several students from my district who accepted their appointment to the Service Academy. These students demonstrate not just academic achievement, but also strong devotion to our country. Young students like these will become our nation's leader in the future. It was my honor to call these students this weekend to congratulate them on this true accomplishment. Congratulations to Libby Russell and Zana Paraskevas, who were accepted to the United States Military Academy at West Point. Congratulations to Savion Kirby, Natalie Doig, Audrey Ponton, and Max Prez, who were accepted to the United States Air Force Academy. And congratulations to Victoria Nelson, who was accepted into the United States Naval Academy. I am proud to represent each one of them in the United States House of Representatives. And with that, Mr. Speaker, I yield back.
The chair lays before the House a communication.
The Honorable the Speaker, House of Representatives, sir. Pursuant to the permission granted in Clause 2H of Rule 2 of the Rules of the U.S. House of Representatives, the clerk received the following message from the Secretary of the Senate on April 9, 2025 at 11:08 a.m. that the Senate passed Senate 160, Senate 423. Signed sincerely, Kevin F. McCumber, Clerk.
For what purpose does the gentleman from Arkansas, Mr. Hill, seek recognition?
Mr. Speaker, pursuant to House Resolution 284, I call up Senate Joint Resolution 28, providing for congressional disapproval under Chapter 8 of Title 5, United States Code, of the rules submitted by the Bureau of Consumer Financial Protection related to defining larger participants of a market for general use digital consumer payment applications, and ask for its immediate consideration before the House.
The clerk will report the title of the joint resolution.
Senate Joint Resolution 28, joint resolution disapproving the rule submitted by the Bureau of Consumer Financial Protection relating to defining larger participants of a market for general use digital consumer payment applications.
Pursuant to House Resolution 294, the joint resolution is considered read. The joint resolution shall be debatable for 1 hour, equally divided and controlled by the chair and ranking minority member of the Committee on Financial Services or the respective designees. The gentleman from Arkansas, Mr. Hill, and the gentlewoman from California, Ms. Waters, will each control 30 minutes. The chair recognizes Mr. Hill from Arkansas.
I thank the Speaker. Mr. Speaker, I ask unanimous consent that all members may have 5 legislative days to revise and extend their remarks and include extraneous material on the resolution under consideration.
Without objection.
Thank you, Mr. Speaker. I yield myself now such time as I may consume.
The gentleman is recognized.
I rise today in strong support of this resolution to overturn the Consumer Financial Protection Bureau's deeply flawed final rule on larger participants in general use digital payment applications. Sounds complicated, Mr. Speaker, but it's not. This is a midnight rule created by the Consumer Financial Protection Bureau, and it's overly broad and it's imprecise. It treats a wide variety of digital payment applications, peer-to-peer apps, digital wallets, e-commerce tools, as though they are identical simply because they facilitate payments and serve a large number of users. But these products are not the same. They serve different models, operate under different rules, and pose different kinds of consumer risks. This kind of regulatory overreach is bad enough on its own. But what makes this rule especially concerning is the process by which it was created. The CFPB's approach to carry out this rulemaking is a clear example of undemocratic and unjustified action. The CFPB gave the public just 30 days to comment on this proposal. 30 days for businesses across the country, members of Congress, state regulators, and the public to weigh in on a rule that has potentially profound consequences for digital commerce, one of the most rapidly growing portions of financial services and fintech. In addition, the Bureau rushed to finalize the rule in the waning days of the Biden administration, ignoring much of the stakeholder feedback and pushing it through to try and insulate it from future scrutiny or reconsideration. Now, this is not the first time that the CFPB has issued rules without sufficient transparency or process. In fact, members on both sides of the aisle during my years in Congress have routinely criticized the CFPB for rushing matters, not following the process, not giving the public sufficient time to criticize and critique its proposals. But, Mr. Speaker, this needs to be the last time that the CFPB does this. In a post-Chevron deference world, Congress must step in and assert our Article I authority over independent agencies that stray beyond their statutory authority, bypass the legislative process, and undermine the public trust. Let's be clear. There's no apparent evidence of widespread consumer harm that justifies this rule. There's no demonstrated market failure here. What we have instead is an agency stretching its mandate in a way Congress never intended. By allowing this final rule to remain intact, we are affirming that scale alone justifies the regulation, meaning size, scope alone justifies the regulation, regardless of the conduct, the risk, or harm to a consumer. This CFPB approach violates decades of balanced principles in assessing and implementing regulations in finance. And it's certainly not the barometer that Congress intended for the CFPB to use when interpreting their authorities. This is not responsible, risk-based regulation. It's a shortcut to control applied without the justification that both consumers and innovators deserve. Some may try to frame this argument as a gift to big tech. That's a distraction. This is not about defending large companies. This is about defending good governance, our legislative authority, and the public's right to be part of major, costly regulatory decision-making. If we allow this rule to stand, we're setting a dangerous precedent, one where federal agencies can bypass Congress, ignore public input, and rewrite rules largely behind closed doors. This is a precedent that we cannot afford to set, regardless of who's in the White House or who's in the crosshairs. Mr. Speaker, the CFPB operated without accountability or transparency. It has undermined consumer protections, stifled innovation, and eroded the public trust. I encourage my colleagues to support this resolution and reassert the proper role of Congress in setting the regulatory agenda and shaping sound financial policy, and I reserve the balance of my time.
Gentleman from Arkansas reserves. Gentlewoman from California. For purposes, the gentlewoman from California seek recognition.
Mr. Speaker, I yield myself such time as I may consume.
Gentlewoman is recognized.
Thank you. Mr. Chair, I rise today in strong opposition to H.J. Res. 28, a partisan Congressional Review Act resolution that will block the Consumer Financial Protection Bureau from supervising payment apps offered by big tech firms like Apple and Google. Before I explain why this bill is bad, let us not ignore that President Trump and co-President Musk are tearing down key government agencies and programs as we speak, like the CFPB and Social Security. Last week, the president launched a global trade war against the rest of the world, including our friends, resulting in a record two-day loss of $6.6 trillion in wealth. Fed Chair Powell warned that these tariffs will lead to higher inflation and job losses. Later today, Republicans will try to pass the president's budget that is loaded with $7 trillion in tax cuts for Musk and the other big tech billionaires, all while they are slashing Medicaid by $880 billion and walking into our agencies and firing people. Employees, some have been working 10, 15, and 20 years and telling them to get out by 5 o'clock. And I absolutely respect the chair of the Committee on Financial Services, Mr. Hill, and what he does, but to talk about good government, he is absolutely defending what nobody would consider good government. We're in a chaotic position in the government of the United States of America. This is the worst that we've ever seen. We've never seen anything like this. As a matter of fact, I think it is a coup d'etat. And so I'm here today because instead of considering bills to lower costs for consumers, Republicans have called up yet another bill to help out the richest man on the planet. The richest man on the planet, who is a friend of Mr. Trump's, who has not been elected by anybody, who is absolutely controlling our government now. The firing of people, the destroying of agencies, all of that by an unelected billionaire who is intent on changing this government in ways that make it look like a dictatorship. Notably, This resolution will shield Elon Musk's X app, which will soon get into the payments business, from supervision and oversight by the CFPB. The CFPB oversees the largest banks and the services they provide to consumers, including their payment apps. However, until the large participant rule was issued, the CFPB did not have the authority to supervise and examine the payment platforms of big tech companies. In 2024, the CFPB leveled the playing field between big banks and big tech. This rule was necessary because big tech and other non-bank firms have increasingly offered mobile wallets and payment apps for consumers to use. While the same consumer protection laws that apply to the banks do not apply to these big tech firms, it is critical that the Consumer Financial Protection Bureau examine them to ensure they too are following the law. This will help the Consumer Financial Protection Bureau oversee these great big tech apps to protect the millions of consumers who use them and their digital wallets from fraud, to safeguard their sensitive personal data and prevent unfair, deceptive, or abusive practices. So let's be clear. The Consumer Financial Protection Bureau's rule that Republicans want to repeal by passing H.J. Res. 28 imposes no new standards on these big, large payment apps. CFPB's rule simply allows the government to check that these companies are following the law, the very law that Congress passed to give the Consumer Financial Protection Bureau the authority to examine the largest big tech participants. Payment fraud is at its all-time high, and these payment apps play a big role in that increase. I have received more and more complaints from constituents who have been tricked, scammed, and defrauded out of their hard-earned money on these payment apps. And consumer use of payment apps is only increasing, with lower-income households experiencing a disproportionate share of complaints. Between 2018 and 2021, fraud-related complaints involving Venmo, Cash App, and other payment apps surged by over 460%, while financial losses skyrocket by more than 360%. Candidly, we should be working together across the aisle to tackle this rise in payment fraud, not undermining the authority of the agency that can enforce the law. This should not be a partisan issue. Instead, Democrats have to fight back against both Trump's efforts to kill the Consumer Financial Protection Bureau and Republican efforts to gut the authorities of the Consumer Financial Protection Bureau. But I'm hopeful that we're making progress to stop these efforts to protect big tech and predatory lenders. A district court judge blocked the Trump administration from dismantling the Consumer Financial Protection Bureau before the administration appealed the ruling. And even this terrible resolution before us received bipartisan opposition in the Senate. Mr. Speaker, as we stand here and discuss these anti-consumer CRAs today, our constituents are deeply concerned about losing Social Security and Medicaid because of the Elon Musk's reckless cuts to government. Families and business across America are struggling as Trump raises taxes on Americans nationwide through tariffs. It makes no sense to pass legislation that eliminates oversight of these big tech apps while millions of people are being defrauded, scammed, and basically ripped off. We see this bill for what it is. Oh, a thank you gift to Elon Musk and other big tech billionaires who came to Trump's rescue during the 2024 election. We all saw them front and center At Trump's inauguration, you saw those billionaires accompanying him. Why are all the billionaires getting together? Because they don't want to pay more taxes. They want to get rid of employees who are providing all kinds of services to the constituents of this country in order to pay less taxes for the richest people in the country. Well, all of them run companies that will directly benefit passing this resolution. Enough is enough. I urge members of this House to show some courage and stand up for consumers, stand up for the rule of law, and reject this harmful legislation. And so I reserve the balance of my time. I've got a lot more to say.
Gentleman from California reserves. Gentleman from Arkansas.
Thank you, Mr. Speaker, and absolutely, I think members of this House should stand up for the rule of law, starting with Article 1, the legislative authority that we draft the statutes here. We direct the independent agencies how to do their rulemakings, under what conditions to do their rulemakings, how to evaluate their rulemakings, what is a reasonable amount of time to get public input, and we have the rights on behalf of the elected representatives of the American people to let our voices be known when a non-elected, to quote my good friend from California, unelected bureaucrat chooses to step beyond the bounds of the statute and do something not in keeping also with process. I want to now yield 5 minutes to my good friend, the gentleman from Nebraska, Mr. Flood, who serves as the subcommittee chair for the Housing and Insurance Subcommittee. Mr. Flood.
Gentleman from Nebraska is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Speaker. I want to thank Chairman Hill for his attentiveness to this issue, and I'd like to thank my colleague in the Senate, my co-lead, Senator Pete Ricketts from Nebraska, for championing this effort and getting the resolution through the U.S. Senate in record time, in less than a week. He beat us to it. There's a lot of reasons to support this resolution, eliminating the larger participant rulemaking from the CFPB. Number one, think about this. The CFPB finalized this rule in the 11th hour in January, days before the transfer of power, well after other agencies stopped their rulemaking. Number two, the rule itself is effectively a regulatory power grab by the CFPB's outgoing Biden nominee, Mr. Chopra. By designating companies engaged in payments activities as larger participants, the Bureau will get to expand their examination authority over an amorphous and ill-defined group of firms with payments tools. Given their track record, I think it's fair to say that we should not be supporting greater exam reach for the CFPB. But I don't want our concerns to remain abstract. Let's take a look at some of the practical effects of CFPB examination that would have over these payment firms. First, let's take a look at some of the problems with how the rule actually distinguishes who is and is not a larger participant in payments. The rule does not only apply to tools where consumers are using wallets to exchange funds on a peer-to-peer basis, it also applies to any number of payment intermediaries that assist small businesses and merchants. For example, express checkout tools would be affected by this rulemaking. Let's say you want to buy an item on the website of a small retailer in Lincoln, Nebraska. If that website allows interfacing with express checkout tools, as many do, then you're going to see the effects from this rulemaking on their ability to easily accept payments from their customers. Congress aside, everybody in this room should fear what happens at my house when my wife does not have access to express checkout. According to a survey from the Small Business and Entrepreneurship Council, 53% of small business owners use express checkout tools. When asked whether express checkout services help their business succeed, 94% of small businesses agreed that the online payment tool is boosting their business's growth. Yet, despite the obvious potential for Main Street and small business effects from this rulemaking, the CFPB failed to conduct any substantive analysis of the effects this rulemaking would have on small businesses, or even conduct a sufficient cost-benefit analysis of the rulemaking more broadly. The reason? The Bureau was less interested in the cost of the rule than in expanding their own regulatory reach. This rule is a perfect example of regulate first, ask questions later, and that was the approach of Director Chopra. Ultimately, this style of regulation is going to chill innovation and hurt the smallest players that depend on these technologies to compete with the big guys. I'd like to submit a letter for the record led by myself with 20 Financial Services Committee Republicans in 2023 for the record.
Without objection.
In addition, the Bureau has consistently tried to imply their authority would not only apply to tech companies, but there's a chance they could bring merchants into their regulatory purview as well. The General Counsel of the CFPB said in a speech during Director Chopra's tenure that merchants might be implicated as large payment players in the future if they aren't quote-unquote mom and pops. Last year, in response to a question on the record from me on this topic, the director made the case that a merchant, quote, that incorporates payment capabilities directly into a website, end quote, could potentially blur the lines between banking and commerce and therefore be subject to the CFPB oversight in the future. However, Dodd-Frank explicitly calls for an exclusion for the merchants from the CFPB's regulatory purview. That idea that a merchant engaged in a commercial financial activity due to payment activities in the merchant's own store or website is outright ridiculous, and it represents yet another expansion of the CFPB's rapidly growing authority. Finally, I'd like to highlight another major concern with CFPB examination authority of these firms and what it would bring. The firms within the scope of this rulemaking are payments firms, but some of these firms also have a social media element to their business. If we fail to act here in Congress, you will have career bureaucrats from the CFPB with the authority to examine some of the most influential social media companies in the country behind the scenes. Do any of us really think that a liberal CFPB examiner would restrict their comments to only a social media company's payment activities? Are we sure they wouldn't provide some quote-unquote feedback on the free speech policies of Meta or X? Leaving this rulemaking in place could provide the next Democratic administration the tools they need to more directly influence even social media. With that, I yield back.
Gentleman's time has expired. The gentleman from Arkansas reserves. Gentlewoman from California.
Thank you very much, Mr. Speaker. It is interesting that my friend, Chairman Hill, raised process concerns over the CFPB, that is, Consumer Financial Protection Bureau, rule that would include following the Administrative Procedures Act. And so I just say, really? This doesn't make good sense. Trump and Elon Musk and DOGE minions follow the law. Shouldn't they have to follow the law? Let me be clear. It is unconstitutional for the president to delete the Consumer Financial Protection Bureau or any other agency without congressional approval. With that, I will yield 4 minutes to the gentleman from California, Mr. Sherman, who is also the ranking member of the Subcommittee on Capital Markets.
The gentleman from California is recognized for 4 minutes.
We're here to deal with 2 regulations, the first dealing with payment systems, the second dealing with overdraft protection. And in both cases, I came here for the entertainment value, to watch Republican after Republican tell us how much they don't trust the Trump administration. It's as if Trump doesn't control the CFPB. The regulation we're considering now is just a regulation that says this is an area we're going to look at. And they're afraid the Trump administration will look at it. It doesn't do anything except begin a process. Why are we as to both of these CRAs? The effect is not only to erase what was done under the Biden administration, but prohibit the new administration from adopting any consumer protection. Why? Because they want zero consumer protection, and they want the Trump administration to have an excuse. And the excuse is Congress passed the CRA, we're prohibited from writing a regulation in that area. So the Republican administration could rewrite these rules. Congress could overwrite these rules. Instead, we're erasing the rules and prohibiting other rules from being there. Then I spent this morning being told that we need to have cryptocurrency because it's going to be this great payment system. And for some reason, the payment systems that use U.S. dollars aren't good. And now I'm here on the floor being told that Venmo and its competitors are so wonderful that there should be absolutely no regulation. So on the one hand, we have to create a new currency for drug dealers, and on the other hand, the current system using the US dollar shouldn't even be regulated because it's perfect. So why do we need to regulate here? First, to prevent excessive fees. Second, to prevent deception. But third, and this one's obvious, to prevent the loss of consumer money. Venmo is holding $7 billion of consumers' money. Now, if you have a tiny bank, a tenth, a hundredth the size of Venmo, you have to make sure that you have reserves. You can't take the money to the horse races. But Venmo, they can do anything with the money, and if they lose the $7 billion, well, you're a consumer, you're out of luck. And Trump can say it wasn't my fault because Congress prohibited us from having prudential regulations. If an entity is in the transactions business is going to hold $7 billion of consumer money, shouldn't we at least make sure that the money is still there? And shouldn't we make sure that they don't engage in Botswana currency swaps and other, or the highest risk transactions they can find to perhaps make a lot of money or lose all the consumers' money? Heads I win, tails the consumers lose. Let me take a minute or two to talk about the other regulation, because after you vote for against the first of these resolutions, you're going to feel so good that you're going to want to vote against the second one. This is the one that limits overdraft protection, overdraft fees to $5 for the big banks, the 175 biggest banks, or they can charge you what their actual cost is if it's more than $5. It requires disclosure of what these overdraft costs, fees are going to be. It will save American consumers $6.1 billion every year. So, if we're concerned about inflation, why shouldn't we tell the banks that overdraft is not a profit center? They recover their costs, maybe a little bit more, but you don't make the consumer turn to the consumer and say, you were so dumb you overdrafted, so we're going to hit you with a wild fee. I'll ask for another minute.
Another 30 seconds, please.
Gentleman's recognized for an additional 30 seconds.
So, do not vote to prohibit regulation of payment systems. Do not vote to prohibit limitations on overdraft protection. Do not vote to allow $6.1 billion to be transferred from your constituents to the biggest banks in the country. Vote no, and then vote no again.
Gentleman's time's expired. Gentleman from California reserves. Gentleman from Arkansas.
I reserve.
Gentleman from Arkansas reserves. Gentlewoman from California.
I now yield 1 minute to the gentlewoman from Texas, Ms. Garcia. Thank you.
Gentlewoman from Texas is recognized for 1 minute.
Thank you, Mr. Speaker, and thank you to the ranking member. The Consumer Financial Protection Bureau, known as CFPB, was created for one reason: to protect everyday people from getting ripped off, especially when tech companies start acting like banks. If a tech company wants to be trusted with your money, it should play by the same rules as any bank. That's what the CFPB was doing, making sure the rules apply to everyone. But Elon Musk doesn't want to follow the rules. He wants to turn X, formerly known as Twitter, into a payment platform without any accountability, no rules. So if you get scammed, too bad, no refunds, nada. And the people who will get hurt, it's the people like those folks in my district that I represent. Young people, working families, folks just starting to save for the future. We're fighting to protect them because the CFPB just isn't a watchdog, it's a lifeline. And we're not going to stand by while Donald Trump, Elon Musk, and billionaire buddies try to kill it. Thank you, and I yield back.
Gentlewoman yields. Gentleman from California reserves. Gentleman from Arkansas.
I thank the Speaker. I want to yield 1 minute to the gentleman from North Carolina, the distinguished former Speaker of the House of North Carolina, who's a new member of the House Financial Services Committee, Mr. Moore. 1 minute.
Gentleman from North Carolina is recognized for 1 minute.
Thank you, Mr. Chairman. Thank you, Mr. Speaker. I rise today in support of Senate Joint Resolution 28, a joint resolution to overturn the CFPB's final rule targeting larger participants in general use digital consumer payment applications. This rule is a textbook case of regulatory overreach. It stems from a flawed process and applies an overly broad approach that blurs important distinctions between very different products and services in the digital economy. Rather than taking a thoughtful and tailored approach, the CFPB opted for a sweeping rule that treats all digital payment services as if they are the same, ignoring critical differences that matter for both consumers as well as providers. When regulators fail to distinguish fundamentally different products, they don't just risk getting it wrong, they guarantee it. The digital economy is too important and involving to quickly blanket policies built on vague definitions and rushed processes. We need thoughtful, targeted oversight that reflects reality, not a one-size-all mandate that will do more harm than good. I want to thank Congressman Flood and Chairman Hill for their work and urge my colleagues to support this resolution. With that, Mr. Speaker, I yield back in reserve.
Gentleman yields. Gentleman from Arkansas reserves. Gentlewoman from California.
Thank you, Mr. Speaker. CFPB's larger participant rule does not apply any new consumer protection standards. It only helps the Consumer Financial Protection Bureau ensure big tech companies with the laws they must already follow. Both banks and non-banks are already subject to federal consumer financial protection laws. But Consumer Financial Protection Bureau supervision is a key tool to ensure big tech follows the law and does not misuse consumer data, and that consumers are not being scammed, defrauded, or unlawfully debanked. This rule allows the Consumer Financial Protection Bureau to also conduct routine exams of the 17 largest non-bank payment apps that facilitated $12.8 billion payment transactions in 2021 with a total dollar value of about $1.7 trillion. And this is not the first time the Consumer Financial Protection Bureau has used this authority in this way. The Consumer Financial Protection Bureau previously issued 5 larger participant rules to examine the largest non-banks with respect to consumer reporting, consumer debt collection, student loan servicing, international money transfers, and automobile financing. Why should big tech get treated special? Why should they be treated any different? Our colleague, Mr. Flood, claimed the Consumer Financial Protection Bureau did not conduct sufficient cost-benefit analysis for this rule, but that is not accurate. There's more than 30 pages of highly detailed cost-benefit analysis, and the gentleman just doesn't like it. And so we know that side of the aisle wish to kill the Consumer Protection Financial Bureau. They've tried in every way that they possibly could. But this side of the aisle maintains that our constituents send us here to represent them. Consumers need somewhere to make complaints. They need to be investigated. They need to be fined if those operations or organizations are abusing them or misusing them. With that, I yield myself such time as I may consume. As we debate this issue, I want to remind everyone what truly is happening. Through this CRA, Republicans are opening the door for President Trump and co-President Musk to further enrich themselves and their own businesses. All of their business ventures with their own digital payment systems, including X and Trump's new payment stablecoin. Now, this is a point that everybody should pay attention to. The President of the United States and his family have created their own crypto companies. In addition to that, in the middle of us trying to negotiate on stablecoins to come to some agreements about guardrails to protect the average investor, he has now founded a new company where he's going to own stablecoins. My goodness. As a matter of fact, Republican efforts to dismantle and weaken the CFPB's authority allows Trump and Musk's companies to conveniently avoid CFPB oversight and supervision. When I was chair of the Financial Services Committee, Democrats held big tech to account, including to convening a hearing with Facebook's CEO Mark Zuckerberg over his plans to develop cryptocurrency called Libra. Moreover, when Democrats led passage of the Dodd-Frank Act, we empowered the CFPB to supervise any large non-bank, including big tech, when they facilitate payments or offer financial products to consumers to ensure that consumers are always protected, no matter who they are dealing with. What we're dealing with now, through Trump and Musk's unapologetic conflicts of interest and self-profiteering, pose far greater risk. Consumer Financial Protection Bureau is extraordinarily important. We've worked hard for consumers to have somewhere to go when they have complaints, when they're being ripped off. Why is it that we would have any member of Congress in any way oppose protecting our consumers? I can't answer that. I don't know why, but I'm going to yield back the balance of my time. I'm going to reserve the balance of my time.
Gentlelady reserve. Gentleman from Arkansas, you're recognized.
Mr. Speaker, let me inquire of my friend from California if she has any more speakers on this matter.
Close.
We have no more speakers on this side, so we're prepared to close as well. So I'll yield to the gentlewoman.
Thank you very much.
Gentleman from Arkansas reserves. Gentlelady from
I
California.
yield myself the balance of the time. Mr. Speaker, Seth Frotman, CFB's former general counsel and student loan ombudsman, summed up our current situation well. He testified, and I'll quote, "You, your family, your neighbors, and your community are at risk because President Trump, Elon Musk, and Russ Vought have corrupted and corruptedly handled over the keys of our nation's consumer watchdog to the largest banks and tech companies in the world. What is happening at the Consumer Financial Protection Bureau is an insult to Congress, to the rule of law, to all of us. When you look past the rhetoric, the deceptively labeled bills touting through the looking glass reform what is going on in the executive branch alongside what is being talked about here in Congress, it really boils down to the one-time tested proposition. Which side are we on? Are we going to stand idly by when the nation's consumer watchdog is decimated? If you push a legislative agenda of more junk fees, abusive medical debt collection practices, big tech domination, and predatory lending, then the answer is pretty clear. End of quote. Mr. Speaker, SJ Reg 28 is opposed by nearly 200 consumer, civil rights, religious, and good government organizations. It was also opposed by a bipartisan group of senators. So I urge my colleagues to vote for American consumers, not the unelected Elon Musk and other big tech oligarchs and billionaires that are just waiting to take over this country. Vote no on this bill. I yield back the balance of my time.
Gentlelady yields. The gentleman from Arkansas is recognized.
I thank the Speaker. Well, let me say that, again, we're talking about unelected bureaucrats in an agency that is not following the strict direction of Congress, and they've overreached in how they've proposed this rule at the last minute, at the end of the Biden administration. It's truly a midnight rule with limited comment period. 30 days, Mr. Speaker, is the minimum under anybody's consideration of a Fair-Minded Administrative Procedure Act comment period, and yet everything you read says that it should be extended if market participants feel like they haven't been heard. And 30 days at the end of an administration over the holiday period at the end of the year is not sufficient time for members of Congress, market participants, consumers, and others to weigh in. So I do have process concerns about how the former director of the CFPB carried on this particular proposal. Secondly, my colleagues have talked about the substance of it and how it is confusing and steps beyond, again, the mission and the direction by Congress to the CFPB. My good friend from California, the ranking member of the full committee, referenced several other large participant-type rules that had been proposed by the CFPB, but they were in discrete market segments. And Mr. Speaker, this is actually one of the biggest concerns about this proposal. It's a wide variety of digital payment services, from peer-to-peer apps to a digital wallet to e-commerce tools like the gentleman from Nebraska talked about, as if they're identical, simply because they facilitate a certain number of payments. But they're not substantively the same. They can't be treated identically. That is a huge flaw in this rule. So I'm yielding myself my final times, Mr. Speaker, to say, I conclude I want to reiterate my support for Mr. Flood's support of the Senate Joint Resolution 28. He's worked hard on this with Senator Ricketts from his home state of Nebraska. They stand on the facts that a vote for this resolution is a vote to prevent the CFPB from stifling financial innovation with its one-size-fits-all approach and limiting customers' access to increased access to financial payments. Non-bank providers of digital payments are already being regulated at both the state and the federal levels. And American consumers did not petition us, Mr. Speaker, to intervene in this way at the last minute in the waning days of the Biden administration. Of all the CFPB's annual complaints that they collect year in and year out, less than 1% even touch on this market. This Congressional Review Act will overturn last-minute rulemaking from the Biden-Harris administration and ensure that consumers have access to innovative financial products. I urge all my colleagues on both sides of the aisle to support this Senate joint resolution, and I yield back the balance of my time.
Thank you, sir. The gentleman yields. All time for debate has expired. Pursuant to House Resolution 294, the previous question is ordered on the joint resolution. The question is on third reading of the joint resolution. Those in favor say aye. Aye. Those opposed, no. The ayes have it. Third reading. The question
submitted by the Bureau of Consumer Financial Protection relating to defining larger participants of a market for general use digital consumer payment applications.
The question is on passage of the joint resolution. Those in favor say aye. Aye. Those opposed say no. The ayes have it. For what purpose does the gentleman from Arkansas rise?
Mr. Speaker, I'd request a recorded vote.
Does the gentleman request the yeas and nays?
I do.
Those in favor of a vote by the yeas and nays will rise. Those in favor of the vote by yeas, please rise. A sufficient number having risen, the yeas and nays are ordered. Pursuant to Clause 8 of Rule 20, further proceedings on this question will be postponed. For what purpose does the gentleman from Arkansas, Mr. Hill, seek recognition?
Mr. Speaker, pursuant to House Resolution 294, I call up Senate Joint Resolution 18, providing for congressional disapproval under Chapter 8 of Title 5 United States Code of the rules submitted by the Bureau for Consumer Financial Protection related to overdraft lending, very large financial institutions, and ask for its immediate consideration in the House.
The clerk will report the title of the joint resolution.
Senate Joint Resolution 18, Joint joint resolution disapproving the rules submitted by the Bureau of Consumer Financial Protection relating to overdraft lending, very large financial institutions.
Pursuant to House Resolution 294, the joint resolution is considered read. The joint resolution shall be debatable for 1 hour, equally divided and controlled by the chair and ranking minority member of the Committee of Financial Services or their respective designees. The gentleman from Arkansas, Mr. Hill, and the gentlewoman from California, Ms. Waters, each will control 30 minutes. The chair now recognizes the gentleman from Arkansas, Mr. Hill.
Mr. Speaker, thank you. I ask unanimous consent that all members may have 5 legislative days to revise and extend their remarks and include extraneous material on the resolution under consideration.
Without objection.
Mr. Speaker, I yield myself such time as I may consume.
The gentleman is recognized.
Mr. Speaker, I rise in support of this joint resolution of disapproval. Today, we can protect consumers and ensure continued access to financial services by voting to nullify the Consumer Financial Protection Bureau's disastrous rule on overdraft fees. In a time burdened by the 40-year high in inflation, when many middle and low-income households are living paycheck to paycheck, ensuring Americans have access to affordable credit has never been more important. Overdraft protection is an optional service that financial institutions provide to help consumers avoid having purchases declined. Instead of the transaction being denied, the bank or credit union charges a flat fee to cover the check on behalf of that consumer. Let that purchase proceed. Let that payment to a utility company proceed. Let that payment for an important rent or mortgage company to proceed. Allowing American families to take care of essential needs like that mortgage payment, rent payment, groceries, or gas before their next paycheck arrives. Over the last decade, competition has driven financial institutions to lower their overdraft privilege fees to retain customers. Innovation has made accidental overdrafts less likely, as many financial institutions now offer low balance alerts, automatic transfers from savings, and other tools to help consumers avoid being in overdraft and better manage their financial cash flow. Competition and innovation, not government-mandated price caps, remain the best way to ensure consumers have access to affordable financial products and services. Unfortunately, this CFPB rule undermines this very approach and threatens to restrict access to credit and overdraft privileges, which all of us should be concerned about. The CFPB's rushed and haphazard approach to the rule is a clear example of how not to regulate. The CFPB made this decision before conducting meaningful research or considering the real-world consequences of its actions. The CFPB rule imposes a government-mandated price cap on what financial institutions may charge in the way of a fee for an overdraft privilege. Like all price caps, this would reduce the availability of these very overdraft services, especially, Mr. Speaker, for consumers who have lower credit scores or considered higher risk. By doing so, it effectively limits access to credit and that overdraft privilege for those who need it the most at the time they need it the most. The CFPB's failure to consider the costs associated with this regulation, especially the real-world impact on consumers, their local community financial institution, and the broader financial system, only underscores the need to stop this price control before it's too late. The CFPB also creates a false narrative of choice by suggesting that banks and credit unions can either offer an overdraft service at this federally mandated price fixed cost of $5 or comply with extending that as credit and therefore complying with the Truth in Lending Act. In other words, actually underwriting a consumer loan instead of simply offering the overdraft simple, straightforward, fast overdraft fee. This redefinition of what products and services constitute credit thus is problematic, especially since Congress has already defined credit for regulatory purposes. Even more troubling is the way the CFPB oversimplifies the cost of providing overdraft protection. The rule only considers the cost of operating a call center and ignores the many other expenses involved, such as ratifying and dealing with consumer disputes, mailing postage for overdraft notices, third-party collection expenses, technology costs, cost of regulatory compliance. The reality is that these additional costs make it increasingly difficult for banks to continue offering overdraft protection. Many will simply choose to stop providing the service altogether. And those who will suffer the most from this, the very people the rule is designed to protect. Mr. Speaker, in 2023, a survey found that 92% of customers who were aware their balance wouldn't cover a transaction preferred paying the overdraft fee rather than having their transaction declined. Not only is it inconvenient or potentially embarrassing in a particular situation, but it's also fundamental to in-between paycheck cash flow. I'm taking the decision to go into overdraft so I make that mortgage payment on time despite buying clothes for back to school, trying to do Christmas shopping. In my experience with my customers, I never found one who was not a worthy steward of how to use these services over my many years of working with families. Another survey found that 64% of customers think it's reasonable for a bank to charge an overdraft fee, and 72% feel these fees are justified, particularly when it helps them ensure a timely payment of a much larger, important bill like a mortgage or rent. In my experience of helping families across rural Arkansas for many years, as I said, managing their finances, they're pretty smart about how to do that, Mr. Speaker. The truth is that if consumers lose access to overdraft protection, they will be forced to turn to alternative sources of credit that may be more expensive, riskier, less consumer protection, less documentation, less holistically handled as they would be at their home community financial institution or credit union. I encourage all my colleagues to support this resolution to restore common sense to our regulatory framework and ensure that consumers continue to have access to the financial services on which they rely. I reserve the balance of my time.
The gentleman reserves. The gentlelady is recognized.
Mr. Speaker, I yield myself such time as I may consume. Mr. Speaker, I rise in complete opposition to yet another harmful bill put forth by Republicans. S.J. Res. 18, a resolution to allow the biggest banks to increase fees on their customers. You heard me right. I said this resolution will increase bank fees and it will impact 23 million households, or roughly 1 in 5 households that incur overdraft fees each year. Despite Trump and Republicans' campaign promises to lower prices, the president decided to launch a global trade war just last week that wiped out a 2-day record of $6.6 trillion of wealth, affecting the retirement savings of millions of Americans. Moreover, the Fed chair has said these policies will fuel higher inflation by sending the prices of consumer goods up. But it doesn't seem like the president cares about prices anymore, saying, and I quote, I'm quoting, he said, "I couldn't care less. I hope they raise their prices because if they do, Americans are going to buy American-made cars. We have plenty." Trump doesn't care that prices for cars and other goods will rise significantly. We're here today because Republicans now want to overturn a rule that limits banks' overdraft fees to $5, down from $35 or more, and saves consumers $5 billion a year. Not surprisingly, more than 80% of Americans, including Republicans, want to get these high overdraft fees under control. And yet, Republicans will vote to take off the limits on these fees and say that higher fees are good for America. Now, let's clear up a few myths. The Consumer Financial Protection Bureau's rule does not ban overdraft fees, but rather it sets a reasonable limit at $5 per overdraft charged by the biggest banks in America. Despite what opponents may claim, the rule does not impose a hard cap on this fee. It provides flexibility for large banks to charge more if their estimated costs and losses in providing the service are higher than $5. The rule even allows big banks to charge higher fees if they provide a simple upfront disclosure to consumers. Now think about that. Why is it if you want to charge more money than the $5 that you don't want to tell your customers that you're raising and you're charging more? I don't get it. That's right. The biggest banks can feel free to charge higher fees, but they just have to tell consumers that they plan to do so. Furthermore, this rule does not apply to any small community banks or credit unions. In fact, 97% of all banks and virtually all credit unions are completely exempt from the rule. Let me say that again. Community banks and nearly all credit unions are exempt from the rules. We're only debating whether the biggest banks in America should be able to raise these fees. Now, Republicans will try reverse psychology to convince Americans that it's in their best interest to fork over even more money to the big banks. Mr. Speaker, let me help Republicans out. Making Americans pay high overdraft fees only benefits the big banks, no one else. Let me be even clearer. A vote for this bill is a vote for big banks. A vote for this bill is a vote for big fees. And a vote for this bill is a vote against your constituents. Don't just take my word for it. Nearly 300 consumer, civil rights, labor, religious, and community groups all across the country strongly oppose this bill. And Mr. Speaker, these fee increases Republicans are trying to jam down Americans' throats couldn't come at a worse time. The Federal Reserve reported that a key metric of inflation is going up, and that was before President Trump sent the stock market further into the tank with the global trade war he launched last week. Republicans promised that inflation would go down and the stock market would thrive under his leadership. But 4 months into the new administration, that has proven to be false. Whether you like the Consumer Financial Protection Bureau or not, it just doesn't make good sense to hike bank fees on 23 million hard-working families. Democrats on the Financial Services Committee voted unanimously to oppose this bill at a markup in February, and I urge all of my colleagues to unanimously reject it on the floor today. I reserve the balance of my time.
Gentlelady yields. Reserves, excuse me. The gentleman from Arkansas is recognized.
Well, thank you, Mr. Speaker. Well, let me say that the gentlewoman from California knows my respect for her and her leadership on our committee, but Mr. Speaker, there's no effort here to raise overdraft fees in this bill. It's quite the contrast. All we're saying is we don't need the federal government having a price cap on a product that is a very competitive product with many, many banks not even charging for overdraft protection. And there's nothing hidden, Mr. Speaker, about fees on overdraft. The Electronic Funds Transfer Act, signed by this Congress, makes it clear decades ago that consumers must opt into overdraft protection. Let me repeat that. Consumers select to do this. They shop for financial institutions, online, down the street, whatever. They pick their credit union or bank to do business with, and if they want overdraft protection to make sure that they are actually being protected of an extra payment or some bill they have between paychecks, they got it. It's completely spelled out. Reg DD in the Truth in Savings Act requires financial institutions to provide that information clearly. Customers opt into it. I promise you, I had it all during my early career when I couldn't make payments between paychecks. Young family, one income, lots of children, a lot of expenses. You do it. It's a good, prudent practice. And as a community banker for decades, I can promise you families were smart about it, but there's nothing hidden about it. It's fully present, and consumers opt into it, and the competition is intense to retain those customers. Let me yield 2 minutes to my good friend from Tennessee. Mr. Rose was the Commissioner of Agriculture in Tennessee before coming to Congress. He is a very active member of both the House Financial Services Committee and the Agriculture Committee. He has rural Tennesseans at heart and their financial success at heart, and I yield 2 minutes to the gentleman from Tennessee.
The gentleman from Tennessee is recognized for 2 minutes.
Thank you, Chairman Hill, for yielding me time to discuss this important issue. Mr. Speaker, it is no secret that the sky was the limit when it came to regulations for the last administration. Our nation endured 4 years of costly new rules that continue to wreak havoc on our economy and stunt economic growth. Indeed, it's going to take some time to undo the mess from the last White House. Senate Joint Resolution 18 puts us one step closer to cleaning up this mess. It calls the Consumer Financial Protection Bureau's overdraft rule what it is: drastic, punitive, and harmful to banks and credit unions. But it also stands to harm the very people it purports to protect. I share with you today a story of a lady in one of the towns in my district, Lafayette, who said to me fairly recently, "Please don't take away my overdraft protection." If the Consumer Financial Protection Bureau requires banks to charge no more than $5 for a $200 overdraft, we will likely see an end to that service altogether. No one wants to overdraft, but unfortunately it isn't uncommon. In fact, many Americans can recall using overdraft services and them being a lifeline at one point or another in their lives. This is just one of many examples of overreach by the last administration, and it must be overturned. In America, we celebrate capitalism. We encourage competition. We don't smother our financial institutions just for political favor. I urge my colleagues to vote for this resolution in defense of financial institutions that choose to extend overdraft lifelines to their customers who need them. Thank you, Mr. Speaker. I yield back the balance of the time.
I'll reserve.
The gentleman reserves.
Mr. Speaker and members, I think Mr. Hill said many banks do not charge overdraft fees. Then why are they opposed to $5? I yield to the gentlelady from Massachusetts.
The gentlewoman, for how much time does the gentlelady yield?
Ms. Presley, 1 minute.
The gentlewoman from Massachusetts is recognized for 1 minute.
Thank you, Ranking Member Waters. Under your leadership, we have advocated to create an economy that works for all people, not just Elon Musk and wealthy billionaires. That is why I oppose this measure to overturn the Consumer Financial Protection, emphasis on protection, Bureau rule that caps overdraft fees by banks at $5. The work of CFPB has been cost-saving and life-changing, but this bill would undo that progress. Whether it is an elder whose Social Security check was delayed into her direct deposit, likely because of Trump's mass firings, or the young college student who makes the innocent mistake of confusing a savings and a checking account, anyone can be affected by unnecessary junk fees. But let's be honest, it is our most vulnerable who will bear the brunt of the harm. For the single parent who has to pay bills today with money that is coming tomorrow, overdrafting may be their only option. And the exorbitant fees, sometimes $35 for every overdraft, would further push them into debt. It's a shame the Republicans are attacking poor people just to help greedy bank CEOs get richer. The shame and the sham of it all. I oppose this bill and encourage everyone to stand with working people who are struggling to make every single dollar stretch because of your harmful
The gentlewoman's time has expired.
They are struggling to make every dollar stretch because of the harmful policies advanced by your dictator-in-chief. Vote no. I yield back.
All right. Okay.
Members are reminded to refrain from engaging in personalities towards the president. For what purpose does, the gentleman is recognized from Arkansas.
I thank the Speaker. I'd now like to recognize my good friend from Wisconsin, a great leader there, been a fine leader in this House on the Judiciary Committee and an active member of the House Financial Service Committee, Mr. Fitzgerald, for 1 minute.
The gentleman is recognized for 1 minute.
Thank you, Mr. Speaker. I rise today in support of Chairman Hill's resolution to overturn the CFPB's misguided overdraft rule. In Wisconsin, community banks, credit unions are the backbone of our local economies. They know their customers, they serve their neighbors, and they provide trusted financial tools like overdraft protection to help families manage their emergencies. Overdraft protection is a critical tool that helps families avoid declined transactions, bounced checks, and costly disruptions. And it does so transparently with clear disclosure. A 2023 study found the Financial Health Network found consumers want overdraft services and the flexibilities that they provide. The CFPB rule amounts to government price controls that will limit access to a lawful, contractually agreed upon product. The rule will not help working families, it will hurt them. By capping fees below the cost of providing the service, many banks and credit unions will be forced to reduce or eliminate overdraft programs altogether. Because of the CFPB's rule on overdraft, consumers will lose options. The resolution will repeal the CFPB's rule and protect consumers. I yield back. Mr. Speaker, many people will face declined payments, higher minimum balance requirements, or worse, be pushed towards riskier, unregulated products. This resolution will repeal the CFPB's rule and protect consumers' access to financial products. I urge my colleagues to support the CRA resolution, defend consumer choice, and restore regulatory certainty to our financial system. I yield back.
Thank you, sir.
And I reserve.
Gentleman reserves. Gentlelady is recognized.
Mr. Speaker, Mr. Rose, I believe, said that there are constituents who say, don't stop my overdraft. But did they say charge me exorbitant amounts for overdraft? I don't think so. I yield 2 minutes to the gentlewoman from Michigan, Ms. Tlaib.
The gentleman is recognized for 2 minutes.
Thank you so much, Chairwoman. I think it's incredibly shameful that my Republican colleagues want to gut the rule that capped most credit card late fees at just $5. Credit card companies over the people you represent. That's what you're choosing with this. Working families, as many of us know, are struggling with rising costs. 60% of our residents that we represent live paycheck to paycheck. And to know this, when this all came about, is because we found out, our country found out through investigation, that credit card companies were building business plans where 50% of their profit came from late fees. So they basically build a business plan for overdraft fees. That's what they did. So now my colleagues right here want to overturn the rule that prevents the biggest banks. Think about this. This is not like small banks. This is the biggest banks from exploding, shamefully targeting the American people. I know overturning this rule will cost $5 billion annually. That average is about $225 per household that would have to pay the overdraft fees that many of these folks put business plans together on. Credit card late fees, Mr. Speaker, also widens the racial wealth gap and impacts and puts a heavy burden on some of the poorest communities, working class folks. These are frontline workers. Gutting the overdraft rule is a slap in the face of the families, again, who are already struggling to make ends meet. This is raising the cost on families. When we don't check corporate greed. Again, these are credit card companies that you're all hollering